All right, today we are cracking open the really surprising story of America's biggest egg producer, Cal-Maine Foods. And trust me, it involves a financial mystery that has had Wall Street completely stumped. So let's just get right into the heart of it, the central mystery. How on earth does a company have its best year ever? I'm talking profits soaring into the billions, only to then watch its stock plummet to a 52-week low. I mean, it sounds crazy, right? But that is exactly what happened to Cal-Maine. To really get what's going on here, you first have to understand just how huge Cal-Maine is. We're not just talking about an egg company. In a lot of ways, they are the egg market in the United States. Think about this for a second. They have a nearly 20% share of the entire U.S. shell egg industry's revenue. That means 1 out of every $5 you, me, or anyone spends on eggs in this country goes straight to Cal-Maine. They are, without a doubt, the king. And this chart? It just shows you the sheer scale we're talking about. Look at that flock size, almost 51 million hens. That is nearly double their closest competitor. It's this massive, vertically integrated operation, and by that, I mean they control everything from the chicken feed to the delivery trucks. That gives them this immense power and efficiency. But here's the catch. The very thing that makes them so dominant, their incredible scale in the conventional egg market, is also their greatest weakness. And that really brings us to the core of this whole paradox, just extreme volatility. Okay, so here's the most important thing to understand. A huge chunk of Cal-Maine's business is just selling plain old conventional white eggs. And those are a classic commodity. One white egg is pretty much the same as any other, which means prices can swing like crazy based on even the tiniest shifts in supply and demand. And just look at their financial history. This is not a smooth, steady climb. It's a roller coaster. In 2017, they actually posted a net loss of over $74 million. Then you fast forward just a few years to fiscal 2025, and bam, they swing to this mind-blowing record profit of $1.2 billion. It's the perfect picture of the boom and bust cycle they're trapped. So this brings us to the first part of the mystery. Where did those record-breaking profits even come from? Well, they were driven by something truly devastating and totally unexpected: the avian flu. Yeah, in a really strange and honestly tragic twist of fate, the bird flu outbreaks that wiped out flocks across America ended up creating a massive financial windfall for the companies that survived. I mean, with millions of hens gone, the supply of eggs just plummeted, which sent prices into the stratosphere. And that massive supply shock, it leads directly to this number: $1.22 billion in net income for their 2025 fiscal year. It was an all-time record, a profit that was born directly from those sky-high crisis-level prices. So you can see the problem, right? This kind of volatility is no way to run a business. And the leadership at Cal-Maine, they know this better than anyone. They know you can't build a stable company on a boom and bust cycle. So for years, they've been working on a plan to get out of this trap. So what's the plan? Well, it's pretty simple on paper, but a lot harder to actually pull off. The idea is to deliberately shift the entire business away from those unpredictable conventional eggs and move toward products that have much more stable pricing and, importantly, higher profit margins. And get this, they're not just talking about it. They are really doing it. And the speed of this change is just incredible. These more stable specialty products now make up almost half of their total net sales. That is a huge jump up from just 31% the year before. They are moving fast. So what are we actually talking about when we say specialty products? Well, think about things like cage-free and organic eggs, often sold under big brand names with fixed price contracts. But it's also prepared foods, like the little egg patties you get in a breakfast sandwich. And now, thanks to a recent acquisition, they even sell frozen waffles. The key here is that all of these products have much more predictable, much more stable pricing. Which, of course, brings us back to the final piece of this puzzle. If the company is making all the right moves and they have this really smart long-term strategy, then why on earth did the stock price collapse right after a record year? Well, the answer is actually surprisingly simple. It all comes down to one fact. Those record profits, they were never going to last. They were a temporary blip, an anomaly caused by a crisis. And as the egg supply across the entire industry started to recover from the bird flu, prices inevitably came crashing back down to normal. And you can see this happening in real time if you look at their latest results for fiscal year 2026. As egg prices fell from those crazy highs, you can watch both their revenue and their net income drop sharply just from the first quarter to the second. And when you compare that quarter to the same one last year, during the peak of that price spike, the drop is just staggering. Net income was down over 53%. For investors, that was the big red flag they were watching for. It confirmed that the 2025 boom was a one-time thing, not the new normal, and that is why the stock fell.
But hold on, the story's not over, and it's not all bad news. There's actually a potential bright spot on the horizon, something that could give their long-term strategy a major boost.
You see, the brand new U.S. dietary guidelines for 2026 have basically flipped the old food pyramid we all grew up with on its head. Now there's a huge emphasis on whole foods and, crucially, on protein. And guess what food is a super affordable, high-quality source of the very thing the government is now telling all of us to eat more of? Exactly, the humble egg.
So, where does all this leave us? What's the takeaway? Well, Cal-Maine is a very well-run company, and it's making all the right moves to escape its volatile past. But it's still not clear if that big pivot to specialty products can really overcome the powerful forces of the commodity market. For now, it's just this fascinating story of a company in the middle of a huge transition, which leaves us with one final, crucial question. Can Cal-Maine's long-term strategy truly help it escape the shell game of the commodity market for good?